Across commodities with Pete McGuire from BAXTER FX with me in studio. Pete, welcome to you. Interesting, overnight you saw moves on the currencies, particularly with the euro. Heading into the summit, are you saying that indicates, if anything, an unwillingness to bet on a big outcome?
Well, good morning, Carson. Have a look at what's happened across so many different issues. We look at how much the commodities complex has come back. We think about the last quarter as being very, very savage. And, I think you're going to see further uptick for the US dollar, if that's the best way to answer that particular one, because I just feel that we're still worried about those Italian and Spanish bond auctions. I don't think a lot's going to come out of this particular summit over the next 2 days. And I think Merkel's made her stance fairly clear that there's not going to be, too much giving away from Germany.
Nothing as long as I live, it would seem to be.
Yes.
That's summing it up. Does that imply, though, that the Fed sits on the sidelines as everything roils and rumbles across the Atlantic? If the dollar's going to get a bit of a leg up, that's not telling you markets eyeing any quant easing come August.
No, but it's just that simply we're worried about the European situation over the short term. I think that's the main focus. And collectively, that Spanish issue is really starting to unwind. We move into Italy, and I think it's going to be their summer. There's no doubt about it.
What do you think the ECB moves before the Fed? For that very reason, potentially has to intervene somehow, maybe another LTRO.
It could well be. I think that may be the case. And the other side, of course, is that where the euro sits at the moment, I think it's still overvalued very much. We saw a low at 124.40. It's the lowest in 2 weeks. I think it's just under 125 right now.
Yep.
That was in the last few hours.
124.95.
There you go. So it's still under 125. I wouldn't be surprised to see that 122 sometime in July, if not lower. And I'm still calling, 115, 112 by sometime in 2012.
Let's talk about the pass-through with the A dollar, because interesting, all the correlation to commodities which have only been in one-way traffic down.
You bet.
AAA rating providing some support, but when does that start to get reassessed? Not the rating,
no, but those currencies.
Yeah.
You think of Norway, New Zealand, Canada and Australia. We've got, by the way, we've got the highest as far as nominal rate, about 3.5% in the industrialised world. So that's how Australia's going. And Moody's reaffirmed, so you'd be happy, reaffirmed New Zealand's stance as a AAA over in the last couple of weeks. So there is no doubt that those currencies have held up well, considering that Brent's down the best part of 26%. I think copper's down around about 12%. You've seen coal prices nearly down 20% in the last quarter. So it's been a very savage sell-off. And yet those currencies have held still. They've only off about 2 to 3%. So I think you're going to see more pressure on those as commodity prices do come off.
It perversely, though, plays into foreign investors' hands quite nicely, though, right? It kind of then just maybe pushes them over the line if they're looking for that perception of safety.
Yes, very much so.
This market is safe harbour.
Well, it is, because that AAA rating says it all. I mean, you look at the BRIC economies and they're being savaged.
Look at India.
India down, I mean, it's the weakest that the rupee's ever been, 57 to the US dollar. And there's much concern over there. The central bank intervention, they raised rates very aggressively in 11, and now they're having to unwind a lot of that. So there's a lot of impact. You're seeing Brazil under pressure a fair bit. Russia's well off. Falling gasoline and crude oil prices, and of course China's slow down with the Shanghai index well back.
And yet China continues to finance India to the hilt just as much as it's buying US treasuries.
Yes.
They're kind of in everybody's back pocket.
Absolutely.
What has gone wrong in India? Not to get diverted too much, but that big story of, going head-to-head with China.
Yeah, probably outgrew itself a little bit too quickly. Remembering that currencies and commodities and countries are all interlinked, and when you have massive growth, 7s and 8s and 9% compound year on year, eventually you do have a little bit of a tail off. And it's very lumpy, and there's earnings, and as far as forecasts, we're saying that you're going to see probably a continued slowdown back to more realistic levels for India.
What about realistic levels on crude? Because now we see the sanction play out with those nations that have said, all right, we'll support sanctions.
That's right.
And no to
South Korea.
Yeah. How's that going to put a bit into crude, or will the Saudis' response offset any freeze at any
Yeah,
shortage.
I think the Saudis will just, and of course Iraq's producing far more, considering what's happened over the last couple of years. So I think that shortfall as far as the Iranian sanctions, which come into play this Sunday, they're not going to affect the market greatly. We're seeing WTI under $80.
And you're still bearish that it could go further?
Yeah, well, I remember I mentioned a couple of weeks weeks ago, I think, 75's got a handle on it. It may not get there, but it may get to 77, 76. The only things that are going to stop that are going to be increased tensions in that Middle East, Syria, and of course if that blows over to other parts of the Middle East, and the hurricane season moving into the Gulf of Mexico.
So far, nothing, though, has kind of given reason to think that would affect things fundamentally. I mean,
well, that's right. Yeah. And I think a continuing strength of the US dollar against the euro is going to force the oil prices to come down a little bit further.
Let's talk about gold. The smart money overnight was that any sign of a rally seems to be, as soon as it's there, snuffed out, and investors are selling on those sort of sharp moves higher. So what's going to see a breakout of this range?
Well, I tell you, it's defied a little bit of logic, and I just think where it's at the moment may be a holding pattern. So, I think you've got to be more neutral than bullish or bearish. Just sit on the sidelines. It's very volatile. I don't think we're getting a clear understanding of where the actual ground lays. So it's far better just to sit back and just observe, I think, at the moment, remembering that a lot of people are being affected from hedge funds and, of course, large players as far as margin calls and so on. Exactly. So there's only so much money to go, and if you're in a trade, sometimes you pull out of that trade for the simple reason of, exposure to other investment classes.
Well, and let's just get your kind of wild card pick on what those might be. Are you still overweight cash?
It's pretty hard. I mean, if you're looking at, that's where Australia is such a huge player. This is what's, we're still at 3.5% industrialised nation.
And if you're an SMSF this year, that would have been the place to be. Maybe it's too late now, but perhaps it comes down to interest rates. When do you see them going up?
I don't see interest rates here going up in the short term. I think we're going to see probably a levelling off. You may see another 25 basis point cut in the next couple of months. It's still pretty bleak out there. We're seeing redundancies and I think it's just a pretty tough time.
Macquarie cut its call on the overall market levels for 2012 this week. Are you revising back your position?
I think, where the market's sitting at the moment, hopefully we see another uptick in the next 6 months, but reality, you may be looking at that 4,050 to 4,200 range could be, a fairly strong headline number,
All right, Pete.
I don't think you're going to see much higher than that, Carson.
All right, we will leave it.
Thank you.
As always.
Cheers.
Kelly, your insights. See you next week.
Thank you.
Pete McGuire there from BAXTER FX, no less.